Finance Limited is an international business company incorporated under the International Business Companies Act 1999 of St. Lucia, with its registered office located at 20 McCool Street, Castries, St. Lucia. The company is an alternative investment company focusing on the specialty real estate investment channel. The company is dedicated to unlocking value in real estate assets across the Caribbean by deploying flexible capital through debt, equity, and other types of capital structures. The company's shares are listed on the main market of the Jamaica Stock Exchange, with its first listing on October 5th, 2021. By virtue of the shares being listed on the main market of the JSE, the company is subject to all laws applicable to issuers of securities in Jamaica and companies listed on the Jamaica Stock Exchange. Since our inception in August 2019, SRF has been steadfast in its mission to unlock value in real estate assets across the Caribbean through innovative and flexible financing solutions. Our commitment to this mission has positioned us as a leading alternative investment firm in the region. We are dedicated to accelerating economic growth and delivering attractive, risk-adjusted returns for our shareholders. I'd like to introduce you to the directors of the company. In addition to myself, we have 5 other directors. To my far left, we have Mr. Linville Freeman. He's also the chairman of the Audit and Governance Committee. We have beside him Miss Elizabeth Steer. And then beside her, we have Mr. Pierre Williams. Beside me here is Mr. David Cummings. And David is the Vice President and Head of Real Estate and Project Finance at SYGNUS Capital Limited, the investment manager of SRF. We have online Dr. Ike Johnson, and he's joining us virtually. Ike is the Senior Vice President and Chief Operating Officer of SYGNUS Capital Limited, the investment manager. And there you have a picture of him right there. We also have with us this morning Mr. Rory McNamara, the representative from our company secretary, MCSI Inc., situated in St. Lucia, and they're sitting in our St. Lucia office. And along with him is Ms. Valerie Rapier, a representative of the company secretary, MCSI Inc., sorry. The directors who are joining us online, are able to fully participate in the meeting and answer any question that may be posed to them. We would like to remind shareholders that SRF does not have any employees and has engaged the services of the investment manager, SYGNUS Capital Limited, to manage the day-to-day operations of the company. Consequently, also in attendance, we have members of the investment manager's executive and senior management team. We have with us Mr. Beresford Gray, who's sitting on the podium here, Mr. Jason Morris, sitting on the front row here with us, Chief Investment Officer. And by the way, Mr. Beresford Gray is the Chief Executive Officer of the investment manager. We have also Ms. Serlyn Hudson, Chief Legal and Compliance Officer, and she's somewhere in the back there. Don't see Mr. Greg Samuels. Is Greg with us this morning? I'm not seeing Greg. So we have Mrs. Elizabeth James, VP and Head of Wealth. She's right here with us. Ms. Monique Anthony, VP and Chief Financial Officer. Ms. Justine Powell, VP and Investment Manager, wonderful. VP of Investment Management, I'm sorry. Yashi, I'm not seeing Yashi around. Yashi isn't here with us. And then we have Mr. Andrew Foreman, AVP Legal Counsel, and he will also be our scrutineer later in the meeting. Several other team members of SYGNUS Capital Limited are here with us this morning, and we appreciate their presence. I would also like to acknowledge the presence of the following persons: representatives of our auditors, KPMG, represented by Mr. Damien Reed, Audit Partner, and Mr. Zafian Edwards Newman, who is the director. And Mr. Reed advised me earlier that from here and henceforth, Mrs. Newman will take all responsibilities for any action the auditors will execute in this meeting today. All righty, good. Representatives from our registrar and transfer agent, the Jamaica Central Securities Depository Limited, are also here with us, and they are represented by Dr. Rennie Brown and Mrs. Adika Green. Several members of the press and non-shareholders are also present with us. During the AGM, I will refer to SYGNUS Real Estate Finance Limited as the company, or SRF. All means the same thing, SYGNUS Real Estate Finance Limited. You have been provided with a copy of the agenda which sets forth today's proceedings. There are no apologies for absence, and so I'll move into the agenda. To address the minutes of the meeting, the directors have confirmed that the minutes of the annual general meeting held on 20th of March 2025 are a true and correct record of the meeting. Copies of the minutes of the meeting are available for viewing on the company's website. So let's talk a little bit about the purpose of the meeting. The purpose of the AGM is to seek the approval of the shareholders of the company for the respective resolutions as outlined in the notice. The first item of ordinary business is the adoption of the audited financial statements for the year ended August 31st, 2025. The second item is the election of directors. The third item is the director's remuneration. And the fourth item of business is the appointment of KPMG as auditors going forward and setting their remunerations. The resolutions were duly set out in the notice of annual general meeting dated 15th of December 2025, which was duly signed by the company secretary. There are several procedural matters I'd like to bring to your attention before we get into the business of the meeting. So firstly, casting a vote. If you're in this room, so if you're casting a vote in person, shareholders attending the meeting will be asked to vote by a show of hands. Now, each person in the room who is a shareholder would have been given a little armband, a red one or a yellow one. And so when you're voting, you'll be asked to raise your hand, the one with the armband, red or yellow, and that's the vote. That's the hand that will be counted. If you raise the other hand and we don't see an armband, it won't be counted, okay? So please raise the one with the armband, okay? All righty. You will be asked to vote for the resolution, and then you'll be asked to vote against the resolution. So if you are voting in favor of the resolution, you vote on the call for. If you're against the resolution, you vote on the call against, okay? If you abstain, your vote will not be counted. Okay? All right. All right, so casting a vote, virtual attendance. So when a resolution is tabled, you should wait for the options to appear on your screen or select Vote Now if that appears on the screen. Once the resolution is on screen, you would vote for, so you'll tick the box for, or you tick the box against. You select either option and select Submit at the bottom of the screen. You must select Submit, okay? You will then be asked to confirm your vote. Select Yes. If you wish to change your vote, select No, and you can change the vote, but you must thereafter select Yes in order for the vote to be submitted, finally. Okay, casting a vote, proxies. The company secretary has advised that a number of valid proxies have been received in relation to each resolution. In relation to the proxies where the chairman has been appointed to vote, I will vote all directed proxies in accordance with the directions provided. So if that person said, I'm voting for I will vote for that resolution in accordance with the proxy direction. If that person said against, I will vote against in relation to that particular proxy. Where undirected proxies have been submitted, so someone signed a proxy form but didn't indicate that whether they're voting for or against, I will vote for all the resolutions. Okay, so I'll vote in favor of all the resolutions in relation to those proxies. For the remaining proxies, the proxy holder must attend the meeting in person or virtually to represent the member. Those proxies will be deemed valid once the registrar has confirmed the attendance of the appointed proxy holder. Proxy holders may also vote online where the shareholder has not indicated their vote on the proxy form. Once the registrar has confirmed the identity of the proxy holder online, the proxy holder will be allowed to participate in the meeting. As I said before, Mr. Andrew Foreman will act as our scrutineer, and so he will confirm the votes by a show of hands and also those votes that are online, and he will tally all the votes and indicate to us the result of each vote on each resolution. Question and answer sessions. I know a lot of persons here are looking forward to posing some questions. So we'll have 2 question and answer sessions. The first will be prior to the adoption of the resolution for the audited financial statements. The investment manager will make a presentation on the company's performance and the outlook of the company, and at the end of the presentation we will have the first question and answer session where shareholders may ask questions. We have allotted 15 minutes to this segment. Mr. David Cummins, he will moderate our question and answer sessions, both of them. We're going to have 2 of them. Following the votes on the remaining resolutions, there will be a second question and answer session, and we have allotted 15 minutes to that session also. In that section, you would be able to ask questions on the company's business or any general matter pertaining to the company or the business of the meeting. For the shareholders attending in person, if you wish to ask a question, you should indicate by raising your hand, okay? This time, you could raise either. And someone will bring you a microphone so that you can pose your question. For the purpose of the minutes, before you ask a question, please state your name and status as a shareholder so that we can adequately capture that information for the minutes. For shareholders attending virtually, if you wish to ask a question, you should select the Q&A option that is located on your screen, then enter the question into the box, your question or questions, you could enter several questions, into the box provided, and select send. The send button is located to the right of the text box to pose the question. The question will be read aloud by one of our hosts so that the other shareholders can hear the question. Shareholders are asked to limit their questions to 2 to give others an opportunity to pose questions and to ensure the meeting's agenda can be completed on time. Questions and comments from the floor should pertain to the specific matter under consideration at that time. Okay? Now, if you've asked 2 questions and other persons get a chance and you have another question thereafter, once the mic is open, then we will accommodate further questions. Of course, there's a limit to which we can accommodate additional questions. Okay. With this background, we will now move to the formal business of the meeting as set forth in the notice of the meeting and the agenda. To facilitate the orderly conduct of the meeting and give all shareholders an opportunity to participate, we will follow the agenda as outlined. I will now present the formal business of the meeting. We will take the resolutions in the order as outlined in the notice. So the first resolution has to do with the audited financial statements. In accordance with Article 195 of the Company's amended and restated Articles of Association, the company is obliged to lay before this meeting the audited financial statements together with the reports of the directors and auditors, which are contained in the company's annual report for the year ended August 31, 2025. The audited accounts were circulated and are before the meeting for discussion. Before inviting discussions on the reports, I will invite our auditors, KPMG, to make a presentation on the auditor's report, and thereafter, I'll invite the investment manager, represented by Mr. Jason Morris, the Chief Investment Officer, to make a presentation on the company's performance and outlook. Our external auditors, KPMG, have given their opinion that the audited financial statements present a true and fair view of the financial position of the company as of August 31, 2025. I almost said Mr. Damian Reed, but I'll correct myself. Mrs. Edwards, Director at KPMG, is a representative here with us who will present the auditor's report. Mrs. Edwards, please come to the podium.
Hi, good morning, everyone. Our auditor's report is laid out on pages 41 to 48. Similar to previous meetings, we will not read the entire report, but we'll take you through page 41 and page 48. As a reminder, the reason why we're not reading the entire report is because we're not mandated to for a St. Lucian entity. Page 41. KPMG in Barbados and Eastern Caribbean, suit number two, Rodney Bayside Building, Rodney Bayside, Grosselet, St. Lucia. Telephone 246-434-3900. Email ec.info@kpmg.ic. Independent Auditor's Report. To the members of SYGNUS Real Estate Finance Limited. Opinion. We have audited the financial statements of SYGNUS Real Estate Finance Limited, the company, comprising the separate financial statements of the company and the consolidated financial statements of the company and its subsidiaries, the group, set out on pages 49 to 118, which comprise the group's and the company's statement of financial position as at August 31, 2025, the group's and company's statement of profit or loss and other comprehensive income, changes in equity and cash flows for the year then ended, and notes comprising material accounting policies and other explanatory information. In our opinion, the accompanying consolidated and separate financial statements present fairly, in all material respects, the financial position of the group and company as at August 31, 2025, and the group's and company's financial performance and the group's and company's cash flows for the year then ended in accordance with IFRS accounting standards as issued by International Accounting Standards Board, IFRS accounting standards. Basis for opinion. We have conducted our audits in accordance with the International Standards on Auditing, ISAs. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the financial statements section of our report. We are independent of the group and the company in accordance with the International Ethics Standards Board for Accountants, International Code of Ethics for Professional Accountants, including International Independent Standard, IESBA Code, together with the ethical requirements that are relevant to our audit of the financial statements in St. Lucia, and we have fulfilled our ethical responsibilities in accordance with these requirements and the IESBA Code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide the basis for our opinion. Page 48. Auditors, from page 48, I will be reading the last two paragraphs. So we communicate with those charged with governance regarding, among other matters, the planned scope and timing of the audit and the significant audit findings, including any significant deficiencies in internal control that we identified during the audit. The engagement partner on the audit resulting in this auditor's report is Mr. Damian Reed, which is sitting here. KPMG, Chartered Accountants, Grossi Lee, St. Lucia, November 2025. Thank you.
Thank you, Mrs. Edwards. I'll now invite Mr. Jason Morris, Chief Investment Officer of SYGNUS Capital Limited, to make a presentation on the company's performance and outlook. Mr. Morris.
All protocols observed. Good morning, everyone. Okay, let me spend a few moments to go through, from the investment manager's point of view, the events and background that led to the financial performance for the financial year ended August 2025, and then present a few items on the strategy of the firm going forward. So, first thing that we want to highlight here is just from inception, the fact that SRF would have generated a positive net profit in each of its first 6 financial years as an operating entity, with a net profit of 787.01 million for the financial year under review. Now, in terms of the background, just a few points. First, I would like to highlight the fact that SRF essentially started its first financial year, would have spanned a substantial portion of the COVID-19 environment, as you can see on the chart. And then for the next 2.5 or so years, SRF, as a very young company, would have been going through the logistics supply chain issues that caused raw material input prices to be substantially increased. So we had to navigate ourselves, or navigate the performance of the company through that period. And then at the back end of COVID, that resulted in us having to kind of reorganize the strategy for the firm, which is to focus a lot more on income generating activities, while at the same time not losing sight of the vision to actually unlock capital appreciation from real estate assets that we have on the balance sheet. Also want to highlight the fact that we represented to shareholders when the company went public that SRF typically has an investment life cycle, or operates with investment life cycles. And this investment life cycle typically lasts between 3 to 5 years. And you can see on the slide that SRF would have completed the first investment life cycle, which is not, is not calibrated exactly with the end of each financial year. So there's overlap between the end of the first investment life cycle and then the start of the second investment life cycle, which is where we are in now. You can see that there's overlap there. However, the grand conclusion to this first slide is that from a shareholder perspective, SRF would have generated an average return on average equity of 17.5%, which is commendable. So, segueing into the second slide, you can see I want to highlight a couple things. The first thing is obviously ROE, which is quite healthy, and we hope to maintain this throughout time. Now, obviously, from time to time, the net profit of SRF, based on the strategy that the company has employed, is going to fluctuate. Some years it will be high, some years it will be low, right? So the second thing I want to highlight is from a shareholder perspective. If you look at the capital that SRF has and reflected by the share capital that was contributed by shareholders, we would have increased this by 1.81 times over the 6-year horizon. In other words, the 17.5% average return on equity can also be interpreted to be that we took shareholders' capital and increased it by 1.81 times, which is almost 2 times, right? So this is another metric to judge how the company is performing. Third thing is, as a publicly listed entity, we know that the market will determine what the price is, but at the same time, we want to also reflect what the book value of the company is. So if the company were to sell off all its assets tomorrow and redeem all the liabilities, pay off all the liabilities, ceteris paribus, what is the net book value that would remain for our shareholders? And that figure is $26.54, which is substantially higher than the IPO listing price. And I'll come back to this $26.54 at the end. Third thing is, third and fourth, in terms of total capital deployed, and all of this capital has actually been deployed within the Jamaican economy, would have deployed 18.09 billion Jamaican dollars over the 6-year period, and would have gotten back 6.87 billion so far from its investments. Let me repeat that. So SRF, which so far has a portfolio that's completely 100% dedicated to Jamaica, has deployed 18.09 billion Jamaican dollars and has gotten back 6.87 billion in terms of exits from real estate assets. I think you should clap for that, you know. And the reason why I think that should be applauded is because SRF is investing in real assets, in the real economy, and you can go and look at them and admire them, or you can touch some of them, and if you want to taste some of the dirt or the concrete, you can also do that as well. And last point here is that SRF would have paid its first dividend in December, which is during the financial year early, and I'll speak more about when additional dividend payments can be expected later. Now to just quickly flow through the actual financials. SRF during the financial year would have generated a net profit of 787.01 million, which was up 149.8% relative to the same period last year. And total investment income was 1.61 billion, up 92.2% versus a similar period last year, while net investment income was 1.18 billion, up 132.1% versus similar period last year. Now I want to stop a moment and just kind of highlight what were the drivers behind these figures. As we would have been saying at many earnings calls, as well as at each of maybe the last 2 or 3 AGMs, SRF generates income through 2 means. One means is to generate capital appreciation from its real estate assets, either through good negotiation, acquire land at favorable price, and then seek to unlock that value by either through multiple means. We can develop the land, we can sell the land if somebody come and offer a great price, and what that will do is ensure that we get gains from doing so, right? So that's an intentional strategy of the firm. And the second way is obviously we finance third-party real estate transactions and structure those transactions where we generate income, or we can also get capital appreciation depending on the structure. So from the first strategy that I spoke about in terms of capital appreciation, that will normally be lumpy. In some years you will exit something, or in some years you might develop something and then get a value from it, right? So in this particular period, SRF would have generated substantial gain on investment property, which would have been the main driver for the increase in the top line revenue, as well as gain from new joint ventures that the company would have entered. So quickly going back to the slide, earnings per share was $2.34, $2.34 Jamaican, and spoke about the book value per share already. I won't spend a time. From a balance sheet perspective, the shareholders' equity would have increased to 9.21 billion, while total assets was 17.04 billion. In terms of investment activity, very quickly here, the company has 16.63 billion in real estate investment assets. So that's the total sum on the balance sheet of the real estate investment assets, and this is comprised of total investment property 10.73 billion, up from 9.26 billion last year. Real estate investment notes 1.89 billion versus 1.86 billion last year. But the biggest increase would have been generated from joint ventures, which now stands at 4.01 billion relative to 2.03 billion last year. And One Belmont, which is an asset that we completed the development of, and we are structuring our exit, is a large contributor to this. But for the financial year, the substantial increase in joint venture value would have been generated from a new joint venture that would have been entered in during the financial year, which we expect to execute over the next couple of years. And finally, we exited 2.01 billion from investments versus 1.09 billion last year. Now, just quick highlights on the Q1 result from a forward-looking perspective. The Q1 financial results, which were released last year, shows total investment income a negative 23.19 million versus, with an improvement versus negative 125.66 million last year, and total investment income negative 150.2 million, with an improvement on the negative 26.96 million last year. And again, I want to highlight the fact that because SRS revenue is lumpy, typically what happens is during the interim financial quarters, we have negative financial performance. Why? Well, SRF balance sheet is comprised of real estate assets, which are pretty much all primarily denominated in Jamaican, well, they are denominated in US dollars, but are accounted for in J. However, real estate assets are not accounted for as financial instruments, and therefore there is no mark to market that you get from an exchange rate perspective in the first instance. And in second instance, we only do valuation of real estate assets at the end of each financial year. Therefore, during interim financial periods, all that is being shown on the income statement is pretty much the income that is generated from lease, etc., which at the moment is not a huge portion of SRS financial income. From investment activity, not a lot of changes would have taken place. The balance sheet now has 16.77 billion in total real estate investment assets, which is comprised of 10.76 billion in total property investments. Real estate investment notes 1.99 billion, and joint venture figure didn't move, again, for the reason that I explained before, which is that the valuations typically happen at the end of the financial year, so during the interim, there's not a lot of movement. And then exits would have had 43 million, small amount of exits, related to 1.66 billion for the similar period last year. Now we're going to move into effectively, well, before I do that, this is a summary of the real estate assets that SRF has or had on its balance sheet as at the end of the first quarter. And the significant change relative to last year would have been the fact that Delphine Holdings Limited, which is a new joint venture, and that asset would have substantially contributed to the new joint venture figure that we would have seen on the previous slides. 58 LMR also would have changed in nature relative to, say, 2 or so financial years ago, where we would have sold 56 and 58 Lady Musgrave Road and received that cash, and then we repurposed that holding company to now hold a new asset in it. So looking on what things that would have occurred subsequent to the end of the financial year and going into strategy, first thing I want to highlight here is that the second tenant for One Belmont, a second tenant would have physically started occupying the building as of September 2025, which is subsequent to the end of the financial year. And that tenant, as everyone would know by now, is the World Bank Group. And their Caribbean head office is now located at 1 Belmont. And the other tenant who's physically in the building, obviously, is SYGNUS Capital. I want to just highlight one thing here, because I think that sometimes people misinterpret how commercial real estate operates. So when you do a commercial real estate development, you complete it, right? It's just a box, it's an empty shell. And then people have to go and do a build out, and those build out can take 3 months, 6 months, 9 months, or a year, depending on the level of build out that persons are utilizing. So I just want to highlight that to correct whatever misconception may exist in some people's mind, not to conflate the fact that because World Bank publicly launched or officially launched their head office in January 2026, that's not when the lease income flows would have started, A. And B, other entities who are not physically in the space, working from the space every day in terms of having employees in the space, their lease agreements started long ago and they're paying lease, right? So it's a commercial real estate is not the same like a residential where once you complete it, people can just move in tomorrow and they start earn, and you can see them in the building, right? People who have workmen doing work, takes a time to do that. So I just want to highlight that fact. The World Bank's building office, by the way, the build out of it was done by SYGNUS. So that's something that we actually do. So we obviously developed the building, constructed it, and then we did the build out, and then they're moving. And there are other tenants who are slated to come into the building in 2026 that SYGNUS is also completing the build out, the interior build out for them. Final couple of slides, which is now looking at the strategy for SRF. So the first 5 years of SRF was all about acquiring assets on the cheap and then developing some of those assets, selling some of them to receive cash and redeploy that cash, etc. The second investment life cycle that we are now in is heavily focused on generating income to shore up the income statement, but also to execute on key strategic assets that we have been working on for a very long time throughout the first investment life cycle. And those two key strategic assets in this second life cycle phase are Lake Spen and Mammy Bay. Lake Spen is a 55-acre industrial zone asset, and Mammy Bay is a 14-acre beachfront property zone in hospitality/residential, right? I spoke about the income enhancement already, which is primarily going to be driven by assets that SRF has that it can develop income from, but primarily from deploying capital to third-party real estate investment notes in Jamaica and the wider Caribbean. So the big first initiative in this second investment life cycle is Lake Spen, which is a commercial and logistics hub, which was formally launched late last year. And this, of course, is 55.4 acres that is being developed with 34 service lots. And we actually have a website that you can visit to get additional information. But the key strategy for SRF here is that we're trying to develop Jamaica's most preeminent commercial and logistics hub in terms of lots that companies can acquire to execute their business strategy. And there are some unique features about the Lake Spen development that I think no other logistics type asset in Jamaica actually has, such as having your electrical being underground, so that if you have a category 3 or 4 or 5 hurricane, the impact of that can be substantially less. So those who want to get additional information about this can obviously contact SYGNUS and David Cummins, who is the lead on all of that. So I just want to highlight that fact. This is a schematic of the subdivision layout, which is, very unique, and has, like I said, a lot of features. The development will have boundary walls, so you're not just buying open land that anybody can just, come on and so forth. We'll have security walls, we'll have guard posts, and of course, we make it modular. So there are lots broken down from 0.8 to up to 3 acres. And the reason why we do it this way is if you want to have a small lot, then you can get a small lot. But if you want to have 10 acres, right, we just group them together and give you the size that you want. So it has been very well thought out, and we would have broken ground on that earlier this year, and the construction has actually started. We have water. So apart from the fact that electricity is underground, we also have adequate supply of water for everyone who want to take a lot under this. So we think that this is going to be a game changer for Jamaica, for the Jamaica logistics space. And we hope that we'll get a lot of support from businesses who want a state-of-the-art logistics exposure. Next couple of slides are just showing you pictures and images from the groundbreaking ceremony that took place. So that's basically the first of SRF's big strategic executable items for this current period, and the second is going to be Mammy Bay. And when we have additional information on Mammy Bay, we'll give that to you in light manner, like what we are doing now. So, final 2 slides is just giving an updated outlook on the strategy. Very simple. There are 4 key pillars. The first one is to execute on our strategic initiatives, obviously. That involves Lake Spain, which I just went through. That also involves One Belmont. So One Belmont, you can see it every day, right? The building is completed. Our next task is to partially exit the investment, which means sell interest in it to get back cash that we can then use to pay dividends and redeploy. And we are far advanced with that. Once we have additional information on that, we'll give you, which will also involve the ability for our shareholders and others to actually participate actively, meaning you can own a share of the revenue flows of One Belmont. So we'll update you later on that. One of the things that we are committed to doing as well is to deepen access to flexible capital in the real estate space by supporting third-party developers. Obviously, we are still going through our portfolio realignment. We would have sold off some of the land that we had because we had too much land. We would have acquired these lands pretty much before COVID, and then COVID kind of changed the nature of how we needed to operate, and so we would have sold off some of those assets, received the cash, redeploy, etc. So we're still going to do that. And obviously, we also have 2 third-party real estate investment notes that we are targeting workouts, meaning the real estate development is our collateral, and we are working through the necessary channels to ensure that we get back the capital that was deployed. The second thing is to expand our footprint across the Caribbean, and we have too many transactions evaluating at the moment, and obviously we select the appropriate ones and give you updated information on that at the appropriate time. But that's one of the things that we are doing in the second investment life cycle. Third one, obviously, as a financing entity, SRF continuously needs to have dry powder or capital on hand to invest, right? So that involves a couple of things, which is to exit transaction that we're already in, get that cash, redeploy the cash, as well as to, at the appropriate time, raise new capital and invest that, deploy it, get back that cash, and keep doing the same thing over and over. And finally, dividends. So we paid 1 dividend since SRF would have started. We are in a phase where we are doing a lot of investments. We would have spoke about Lake Spain, which is a huge undertaking. And so, although we kind of thought that we could have paid a second dividend in December 2025, that the conditions weren't quite right for that. So at the appropriate time, hopefully in 2026, as we partially exit One Belmont, etc., will be able to pay another decent dividend. And the final slide is, this is the book value of SRF compared with the stock price. So the blue line is the book value. The blue line is the book value, and the red line is the stock price. And the book value, the stock price is half of what the book value is. Well, I guess it's less than half. And SRF has assets on its balance sheet that are as yet undeveloped. And we are going through the Lake Spend development now, where the carrying value of Lake Spend development and the balance sheet is just the carrying value of Lake Spend and the balance sheet. It's not developed, undeveloped. So I leave you with those thoughts and leave that chart on the screen. Thank you very much.
Thank you, Jason. We'll now have our first question and answer session, and we'll take questions on the auditor's report and the contents of the presentation you've seen just now. So anything to do with the performance of the business, the outlook, or just the financial operations, we'll take questions on those just now. And I will ask Director Cummings to moderate the session.
Okay, as outlined, just have a show of hands prior to any questions, and we'll also take questions online as well. Do we have a microphone to be brought forward?
Robert March is the name. So, for instance, like One Belmont Road, for example, you guys own the building. You built the building, you own the building. You're going to be selling off sections of the building. So therefore, when you're selling off sections of the building, you're still going to own the building, and you're going to maintain, you're going to be receiving income from the maintenance of the buildings after you sell off segments of the building, right?
Good question. So, on the first point that you raised about selling parts of the building, so the way what we are structuring is the ability for investors to own portions of One Belmont. Say One Belmont is a let's say take it as $100, right? And then let's say a pension fund can own 10% of it. And let's say you as an individual can earn 2% of it. And then for simplicity, other people likewise can own 10%, 3%, what have you, right? And SRF, so we can sell, let's say we sell 50% of it, right? Sell 50% of the value or the share of One Belmont, and we maintain 50. So the amount that is sold, the persons who own those amounts, they would get the revenue stream that is generated from the lease, from those portions that they now own. And the amount, or the portion that SRF maintains would obviously reflect on the balance sheet of SRF as an asset that we have, as well as an income statement, income from those lease flows. Hope I've answered the question. So
who's going to property manage the building?
Oh, there's a property manager already, right? So there's already a property manager who's managing the property. That doesn't affect the what I just described. Property management is just you hire somebody to carry out that function, right? Which is currently existing. They collect the lease payments, etc., etc., and ensure that garbage disposal, if something breaks down, if repairs have to be done, all of that is already going on, and that will continue to go on. What I'm talking about are the economic benefits. So the $100, which is the value of the building, if you own 50% of that, then you get 50% of the economic benefits from what you own.
So you'll be getting revenue from the property management?
No.
So you're going to be exiting?
Remember that property management is just dealing with, is a cost. So think about one Belmont is $100 in value, right? And it costs, I don't know, $1 to worth of expenses to hire somebody to manage the building. Just like how for a residential building, right, you pay maintenance, right? And that maintenance is actually for a gardener to come and do X. You have to pay insurance. If you have pool, you have to ensure that the pool is maintained, so forth and so on. Pay electric, all this stuff. So what I'm saying is that that is not revenue to SRF. That's a cost for basically the asset itself. So the revenue is coming from the lease flows, and the lease flows in the case of one Belmont has to do with the actual leasable space plus the parking. So one Belmont was designed very uniquely, where the space that they occupy, the SR income is generated from that, and then the parking income is also generated from that, because we were trying to solve a problem that exists all over Kingston, which is a lot of beautiful buildings, but you ain't got no parking. Yeah. And one Belmont ain't got no problem with parking.
You got underground and all that, right?
We have both.
Right. So you won't be you won't be exiting one Belmont then?
No. So like I said, we'll be partially exiting. That's why. So the best way to explain it, if you own shares of SRF, right? And let's say SRF is $100, and you own 20% of it. So you own 20%, I own 80%, right? Which is slightly different from you own one floor and I own 2 floors. So what I'm saying is that the concept that we are gonna bring forward is not that you come and buy a physical space in one Belmont, like you buy 5,000 square foot worth of space. I'm saying that you purchase 10% of one Belmont, and therefore 10% of all the revenues net of cost belongs to you, as an example, which is different from normally you go and buy this floor, and this floor is yours, and therefore you can now lease it out to Mary Jane or Tom, and then you collect that lease. So it's not that type of structure.
Okay. SYGNUS is going into, you haven't been into other Caribbean islands as yet, right?
Soon.
But St. Lucia, you haven't been into St. Lucia. You just have an office in St. Lucia.
Soon.
Now, you know that our nearest neighbor is going to be free pretty soon, right? It's going to be opening up pretty soon. Or you don't know that?
I don't know.
You don't know that. All right. Well, I guess you better look forward to that, according to certain news reports and all that, right? So I'd advise try getting a whole pot of dry powder together and liquid dry powder and head there and see what you can buy up before.
Well, thanks for the advice, but the way how we view real estate is that we are very surgical and we assess every single thing to the last detail. So if it's good, we'll be there.
Yeah.
But we don't really jump on news items or flavor the day or this is happening. We kind of just like when we built one Belmont, nobody else was doing commercial anywhere in New Kingston, right? And if you go and count the number of commercial buildings that have gone up since one Belmont, is like you can't count it enough. Well, so we started a trend, right? So once the trend, we're not interested in continuing. So we don't follow trends, we set trends. So thanks for the advice, but we'll be there.
Cautious. Yeah. All right, the final question. All right, like Lake Spend, for instance, right? You guys, I think you said you were not into developing, just buy the land, infrastructure, fix it up, and then sell, right? So Lake Spend, you're developing Lake Spend, putting in buildings.
No. So let me just, good point here. Yeah, go ahead.
Great question. What we're doing at Lake Spend is service lots. So which essentially is a subdivision with infrastructure. So what we are delivering to the purchasers is a lot that comes with roads, sidewalks, concrete wall, security, underground utilities, sewage, water, stormwater drainage, and so on, and a graded lot. So each individual purchaser can then design and build something to suit their business needs, whether that be cold storage, light assembly manufacturing, or distribution center, whatever it is that each individual purchaser will apply to the St. Catherine Municipal Corporation and NEPA to design and build what suits them. What SRF is delivering is a serviced lot to each purchaser, of which there are 34 of them. It is an industrial park. So what we're doing, unlike when you drive past at Ferry and other places, it's just open and you see the Nestle building and so on. Our industrial park will have a 8-foot concrete wall around the entire 55 acres with anti-climb spikes and armed security at the gate. So it is a secure industrial park, not just an open park with service lots. And that's what Jason referred to is a unique proposition in the market to deliver service lots in a secure industrial park.
So we'll take those. And anybody else inside who would have any questions, we'll take those in segment 2. But we'll take 2 online now. All right?
Okay, Adriana Barrett is asking, why is it that we have so much loss?
Loss? Lots or loss?
Loss.
Loss in relation to the Q1. Well, I assume that is Q1 because for the audited financial statements and annual report, which is the subject of this meeting, there's no loss. It's a substantial profit of over 700 million. So for Q1, and for pretty much, if you go back through SRF's history, pretty much every Q1 and every Q2, and to some extent Q3, you would see that SRF has generated losses. And what I was trying to explain with this is that the strategy of SRF is twofold. One is to unlock value in real estate, which will generate capital appreciation. In other words, gains. So I buy something for $10, and then it turns out that it worth 20 or 15 or 17 and 18, and I sell it and crystallize it and get the cash back in my hand, right? That's the first instance. And then the second way that SRF make money is we finance third-party REITs. So John Brown is doing a development. Development is for $100. They have $30 and they need $70, right, to fund it. And they out of this, so we come in and we fund them the $70, and we say we're going to fund you at a rate of, let's say, 14% or 13% or what have you. So in that instance, we are generating lease income. We may also say to Mary Jane, you need to give me 1% of your profit or 2 or whatever the profit. And so we generate additional upside in a case where that development works out properly, right? So if you think about the two things, one of them is capital appreciation and one is income. So the capital appreciation will only be reflected at certain times. A, if I invested in something at $10 and it's now worth 15 and I sold it. So the minute when I sell it, I get recognized in the financial statement pretty much around that period. The second way in which that is reflected is if I haven't sold it, then if I bought it January 1, if my financial year January 1, then effectively I'm not going to see the change in that valuation until I do my audited financial statement at the end of the financial year, right? So that means Q1, Q2, Q3, when you look at the financial statement, that asset value does not change, it does not move. Now remember that these assets are in USD, but you do not get, so if Jamaican dollars depreciate, I still do not see the value of that depreciation through my income statement until I'm doing my audited financial statement, because that's when the valuation is going to change, right? And so the reason why you're seeing, why we have losses in Q1 and every Q1 before now, and Q2 and Q3, which has been the history of SRF, is because the only thing that pretty much flows through our income statement is the income gains from the third-party liens or the lease income that we generate from assets that we hold. But those leaseable assets or third-party liens are, as I would have shown on the chart earlier, are a very small fraction of the total assets that we have on the balance sheet. So that's the reason why you're seeing losses for Q1. But for clarity, for the financial year end, we didn't have losses. I hope I've answered the question. If not, person can rephrase the question.
Thank you. Question 2 is from Kirk Beckford. He said another decent dividend. I hope you meant a decent dividend, because I don't consider the first dividend to be decent. Are you anticipating a better payout?
Very good observation and question. Thanks for that. So, the way I would answer that question is yes, but it depends, right? So, remember I said that the way how SRF is going to pay dividends is I invest $100 in a real estate asset, and then I sell it, I get the cash, and I can pay dividends. So, we are now in our second investment life cycle, where we are doing substantial investment in the Lake Spen and soon to be also in Mammy Bay asset, right? So that we use a lot of cash. But at the same time, we have this big asset called One Belmont that we are structuring the partial exit from. So once we are pretty much in the throes of exiting One Belmont, we should generate substantial amount of cash that we can utilize to pay dividends. So obviously, we want to pay as much dividend as possible, but it really depends on the circumstance in terms of the timing of when the exit in One Belmont is happening. So let me leave it there to say our intention obviously to pay a bigger dividend than before, driven by exits that we have. We also have 2 real estate assets that we have in workout, and these would have obviously affected our ability to pay dividends more and more frequently as well, because effectively our cash is tied up in those 2 third-party liens, where we are working through that process to get back our capital, because we have the underlying assets, right? And it's a process. So once we get through those workouts and get through the exits that we have, then obviously we'll be able to pay a pretty decent dividend. And decent. But obviously it depends. I'm not giving guarantees.
There's one more question online that is more like a follow-up to that. David Rose is asking, One Belmont refinanced its $2.5 billion loan in November 2025. What's the plan to monetize One Belmont going forward, and what are the terms, interest rate, and tenure of that new loan? Jason has mentioned multiple times creating an opportunity for investors to earn on One Belmont.
Yeah, so let me repeat myself. So we are structuring an exit, partial exit of One Belmont, which will allow investors to participate in the One Belmont asset by owning, I guess, stakes in One Belmont. And that ownership of stakes in One Belmont will obviously result in cash flowing to SRF, because effectively SRF would be selling a part of its stake in One Belmont to these new investors. In terms of the question around what are the terms of the refinance, you're going to have to speak to me offline and I can give you some color on that. But we negotiated what I would call pretty decent terms for the takeout of the construction loan. And, we are in the process of completing, we have done a number of market reads with investors who are institutional investors, as well as non-institutional investors who want to participate in One Belmont asset, because now that everybody knows that the World Bank's Caribbean headquarters is at 1 Belmont. You already know that SYGNUS Capital head office is at 1 Belmont. And there are additional, what I would call blue chip tenants in 1 Belmont. So obviously it's an asset that everybody wants to own a piece of. So when we can give more information on that, we'll provide the information, but that's all I can say at the moment.
Okay, thank you. We'll take the other questions in the next question and answer session.
Okay, we'll take a question, sir. We'll take your question in the next session, okay? So at this time, I'd like to invite the chairman, Mr. Horace. Mr. Ado, thank you.
Okay. Thank you, Director Cummings. Okay. So we'll move to the resolution on the audited financial statements. I know there are one or two other questions, but we'll take them in the second segment. But at this point, I'll propose the resolution that the audited company accounts for the year ended August 31, 2025, and the reports of the directors and the auditors circulated with the notice convening the meeting be and are hereby adopted. So, for the shareholders attending virtually, I will now ask that you submit your vote on the resolution on the e-platform. And for those who are in the room, we're going to ask you to vote by showing your hands. So vote those in favor of the resolution, Mr. Foreman. Okay, Mr. Foreman is right there, and so I will just ask Mr. Foreman to give directions on the vote in the room. So if you're online, you can go ahead and select the option, whether you're voting for or against the resolution as read. Mr. Foreman.
So the resolution is on screen. The resolution on the floor is that the audited company accounts for the year ended August 31, 2025, and the report of the directors and auditors circulated with the notice convening the meeting be and are hereby adopted. Those in favor, by show of hands. And those against? And we'll now take the vote of those voting online. Chair, the votes are 56 in favor and 1 against.
Okay. The votes are 56 in favor and 1 against. I therefore declare the motion carried. So to move to item 2, so the second item of business, Resolution 2, Articles 149 and 150 of the Company's amended and restated Articles of Association provides that 1/3 of the board, other than the managing director, if there is one, and the directors appointed by the holder of the special share shall retire from office at each annual general meeting. If the number of members of the board is not 3 or a multiple of 3, then the number nearest to 1/3 will suffice. The directors retiring under these articles are Mr. Pierre Williams and Ms. Elizabeth Steer. They're eligible for re-election and they have offered themselves, okay? The resolutions for the election of each director will be taken separately. So the resolution 2, part 1 is as follows, and can we put that resolution? Okay, so there is it, Mr. Pierre Williams, who retires by rotation in accordance with Articles 149 and 150 of the Company's Articles of Association, and who, being eligible, offers himself for re-election as a director of the Company, be re-elected a director of the Company. Again, those who are online, please go ahead and submit your vote. Those who are in the room, I will ask Mr. Foreman to oversee the proceedings here. So if you're voting for, Mr. Foreman, it's over to you.
So the chairman has read the resolution and put it to the meeting. Those in favor of the resolution, by show of hands, please. And those against? And we'll now take the votes of those attending virtually. Chair, the tally in respect of Resolution 2-1,
Yes.
51 votes in favor and 1 vote against.
Okay. So the votes are 51 in favor, 1 against. I therefore declare the resolution carried. So we're going to move to part 2 of item 2. And the resolution reads that Ms. Elizabeth Steer, who retires by rotation in accordance with Articles 149 and 150 of the company's amended and restated Articles of Association, and who, being eligible, offers herself for re-election as the director of the company, be re-elected as director of the company. Again, for persons online, please go ahead and submit your vote on the e-platform. For persons in the room, I'll hand over to Mr. Foreman.
So the chair has put the resolution to the meeting. All those in favor of the resolution by show of hands, please. And those against? We'll now take the count of those attending virtually.
Okay.
Chair, the votes are 54 votes in favor and no votes against.
Okay, the votes are 54 in favor, none against. I declare the motion carried. In respect of Resolution 3, that the amounts shown in the audited accounts of the company for the financial year ended August 31, 2025, as remuneration to the directors for their services be and is hereby approved. That's the resolution. For persons online, please go ahead and submit your vote for or against. For those persons in the room, Mr. Foreman, it's over to you.
It's on the floor. All those in favor by show of hands. 1, 2, 3, 4. And those against? Thank you. We'll now take the vote of those attending virtually. Chair, the votes are 53 in favor and 2 against.
So 53 in favor, 2 against. Given the vote tally, I declare the resolution carried. Now to item number 4, resolution number 4, appointment of the auditors. That KPMG Chartered Accountants, having agreed to continue in office as auditors, be and are hereby appointed auditors of the company to hold office until the next annual general meeting at a remuneration to be agreed by the directors of the company. For those online, please go ahead and submit your vote now. You have 2 minutes to do so. And for those in the room, I'll hand over to Mr. Foreman again.
The resolution is on the floor by show of hands. Those in favor? Thank you. And those against? And we'll now take the count of those attending virtually. Chair, the tally is 56 votes in favor and none against.
Mr. Foreman, if you could just repeat those in favor.
56 votes in favor and none against.
Okay, there you have it. 56 votes in favor and none against. I therefore declare the resolution carried. Okay? Alrighty. So at this point in time, we have completed the resolutions. I'm going to ask Mr. Beresford Gray, the CEO of SYGNUS Capital Limited, the investment manager of SRF, to come and give some comments, make some remarks regarding SYGNUS Real Estate Finance Limited. Mr. Gray, please come to the podium.
Good morning, and all Portugal observe. Thank you very much, Mr. Chairman. Thanks to Jason for doing a wonderful presentation as well. And I hope that it was very informative to the shareholders. Of course, from my point of view, I'm always very reflective to start. So reflecting on 2025, which represented our first investment cycle, we believe that the shareholders of SRF should feel very proud. It was a beautiful story, and 2025, the numbers reflected that. If you think about 2025, delivering over 780 million in profit, return on equity north of 17%, and the most important thing is that the price to book value, or let me say the book value of the share was $26, even though the market price was, bouncing between $10 and $8. We recognize the volatility in the stock market and the fact that for many shareholders, the stock itself hasn't performed as much as we would have liked. However, put it in context, the Jamaica stock market has been down over the last 3 years by an average of about 10%. I think we just start seeing some green shoots in the market. But from the fundamental of SRF, we are proud that as the manager of SRF, we were able to create significant value as reflected in the book value of equity. We also deliver tangible results in the form of projects such as One Belmont. That's a real project that changes the landscape, the commercial landscape of Jamaica forever. And that's a proud moment for SRF. So 2025 was a successful year. I heard one of the shareholders comment about the dividend, and I would agree with you. The dividend was a little bit small, but as Jason said, a big aspiration of the manager is to continue to deliver value, both in terms of appreciation in share price, our book value of asset, as well as cash distribution. And I believe that the second cycle, which we are now in, is going to allow us to do that. As a matter of fact, a big agenda that we have for this second investment cycle is to really accelerate the value creation process. And we are very confident about that because we have gone through a process where we started our investment company from scratch. And of course, with their confidence and backing, we were able to figure out how do we unlock value in real estate as per the strategy of the firm through equity investment and through debt investment in the form of REINs. And of course, we have a very solid team to make that happen. So in the second cycle, which we are in now, some of the things that we are committing to do, of course, is to deliver landmark projects. And I don't have to go through them. I think everyone here is aware of some of them. Lake Spen, which is in your face. Lake Spen got a lot of coverage. And of course, it's in a sector where we have strong conviction, logistic. So we have to deliver those type of projects, the type of quality project that SRF is known for. The other thing that we will do is to continue to invest surgically, to use Jason's word, in themes where we have strong conviction. Everyone could go out and say that they want to invest in real estate and real estate is a safe asset and so forth and so on. However, investment always entails risk, and you have to base your risk, your thesis, on deep analysis, deep expertise, and areas where you are comfortable that when you look out into the future, a real estate investment typically take up to 5 years or probably even longer to exit. You can actually crystallize that value for investors. So we will continue to invest in themes with strong conviction. Logistics. Jamaica still suffer from shortage of logistics space. hospitality product, there's a significant demand for hospitality product. You're talking about condos, villas in Jamaica and the wider Caribbean. And we know that Jamaica, for example, on average, those products are undervalued. However, I think that we can look to the future with some degree of excitement as Jamaica climbs up, as a country, climbs up the rating scale. When we hit, which I believe we will, investment grade rating, I think we are going to see a lot more positive increase in the asset value for hospitality product, because you're going to have more investors from the international market being able to play in that industry. The other area is obviously commercial real estate. We were one of the first firm out the blocks, as Jason indicated, to start invest in that space. And even though we have seen, let's say, a mushroom of investment in that space, there will still be opportunity in that space, especially if the economy rebound and you have the debt to GDP continue to go down and interest rate coming down. So in the medium to long term, that's still an area that we have a conviction in. So just to give some color, so geography, there are, and one of the shareholders mentioned, and I think his intention was really more to say, look at geography as conviction, because there are going to be markets where we can take advantage, given our expertise in SYGNUS in terms of investing in real estate and unlocking value. And so we will look at markets, and we're already actively looking at markets in the Caribbean that are aligned with our strategy. The other point that I want to comment on in terms of accelerating the value creation process, of course, is how do we exit assets as we invest in them in more creative way and faster way. There are obviously challenges in Jamaica. The market is small. If, for example, if you try to put a One Belmont on the market for sale, there are very few companies or investors or even pension funds, which is major investor in real estate, that can actually buy that building on their own. However, it's an awesome asset. So we have to find, and we are finding, I think Jason hinted to that, SYGNUS being a very creative firm, we are executing on strategies that will allow us to monetize these type of assets or exit these assets in very creative ways, such that we can crystallize the gain for investors, and these will contribute more to our ability to distribute back returns to investors, which I think all of our investors want and is part of our goal. SYGNUS Real Estate has a beautiful strategy. It's a beautiful strategy that we actually conceptualize that try to address the needs in the Jamaican society and the Caribbean society in terms of investing equity in real estate, as well as invest in debt. Invest debt because we are not going to conceive of all the great real estate projects. There are other developers who will conceive of great real estate projects. However, we can deploy capital into those projects and create value for investors. And hence the reason why one of the things that we're going to be doing is to deploy more capital into REINs so that we can participate in some of the great projects that other investors are doing. So when we combine deepening our REIN portfolio with accelerating the exit of different asset that we have through creative methods, we can then crystallize, as we say, some of these gains for investors, and obviously investors share more in all of these upside. In terms of strategy though, the way you raise capital and the way you fund real estate investments is very important. And we have spent the last 5 years understanding that even more than when we started. There's a lot of opportunities. If David tell you his pipeline, you would be astonished. I'm pretty sure the pipeline is close to 500 million. There's a lot of real estate opportunity. However, you need dry powder. Without dry powder, we cannot capitalize on those opportunities for investors. So one of the things that we are doing at SYGNUS is to create different strategies around how do we get more dry powder from strategic partners so that we can take advantage of all of these real estate opportunities, again, to accelerate the value creation process. So in concluding this point, the value creation process, how do we accelerate it? The key message is this: SYGNUS has strong conviction in real estate as a long-term asset. We have proven to you that this is an asset class that can create value for you, and even if there's volatility in the market, the fundamental value is still there. And as a consequence, we will continue to be surgical along different ideas, investing in themes, increasing dry powder, being innovative in our exit strategy, so that at the end of the day we can deliver these value to you and let you actually feel it. The other point I want to make is about risk management. We are ultimately an investment manager. You have asked us to not only invest your capital, but also to be great stewards of that capital. So one of the things that we continue to do at SYGNUS is to strengthen our capabilities in different areas. We are strengthening our capabilities in terms of the human capital, the degree of expertise that we embed in the firm, train and develop. We are embedding more technology to allow us to be more efficient. AI is a big thing right now, and I'm proud to say that we are at the forefront of that in terms of how, as an investment manager, we embed that into our business to make us more efficient. Of course, risk management in terms of being able to look at the big risk, the headwinds that face us. There's a lot of headwinds right now. For example, there's geopolitical issues going on in the Middle East. A prolonged problem along that line will have, consequence for all of us, including investment in real estate. So we are watching that carefully so that we can chart the course. If it should have any impact, we can anticipate and manage around that. Interest rate is still high in Jamaica, and we are watching that carefully. Obviously, that affects funding, returns, etc. Yield compression. There are different pockets of the market where we can see yield compression, especially where there is overbuilt or over inventory on the market. So we are watching all of those spaces carefully. So at the end of the day, the message is we continue to drive value. In this cycle, we are going to accelerate that process. And whilst we do that, we commit to remain great stewards of your capital so that we always take a balanced approach, returns and risk management. Ladies and gentlemen, I want to say thank you again for being so supportive of SRF, for continue to invest in real estate. We have a strong conviction about that. We have a great strategy. And I also want to thank you for your participation this morning. Thank you very much.
Thank you, Mr. Gray. Very well said. We want the returns, but we have to also assess the risk we take in generating those returns, okay? All righty. So I know we have a few questions, a few persons who had questions from the first session, and so we're going to take those questions now, and any other question that the audience, whether in the room or online, may have, we'll take all remaining questions now, and I'll ask Director Cummings to moderate this session. Thank you.
Pleasant good morning. Pleasant good afternoon. Mr. Chairman, before I ask my question, I have a comment. On the subject of the minutes of the meetings, I am aware that you have it online, but one would appreciate it if you have printed copies here for our meetings so that we are aware of questions that were previously asked, answers given, so that we don't have to repeat ourselves. Now to my question. Page 49 under total liabilities. Your total liabilities has grown marginally from 7.73 billion in 2024 to that of 7.82 billion in that of 2025. What are the plans for a reduction in this line item?
I'm going to invite the investment manager to respond.
Thank you for that question. So let me create some context for you, right? So if you recall, SRF has raw land and it has joint ventures, and then it has real estate investment notes, right? So for the joint ventures where SRF actually is doing a development in terms of building, you know, people are going out and mixing concrete and putting up steel, etc. Effectively, SRF doesn't have all the capital as provided by shareholders to do that. So if you take the One Belmont building as an example, the equity that SRF would have put into that building relative to borrowings that SRF would have had to utilize is like 4-to-1, right? So I put up that background to say effectively for SRF to actually invest, if we put up $1 of equity with the shareholders' capital, then we need to borrow at least 2 to 3 times that amount in order to execute the transaction. In other words, use leverage. So with that context, the One Belmont building, which SRF still owns, is financed with construction, well, was financed with construction debt, which has now been termed out. So once SRF pretty much partially exit the building, it will be paying down the debt first as part of that exit. So if we have $100 invested, the building is valued at $100, and SRF has $30 in that, then obviously if we are exiting 50% of our money, 50% of that is going to go first to pay down debt. So to answer your question in terms of what are the plans to do that, every time we exit an asset that is financed with debt or leverage, we pay down debt. And the only time the debt goes back up is when we obviously recycle that money that we got from that payout and then use it to fund another development. And that's how the cycle will continue on and on and on and on. So for example, to acquire Miami Bay, for example, right, it was an incredible transaction where we used very little equity and acquired the 28 acres for 24 million US, right? And at the time, SRF didn't have anywhere close. The entirety of SRF was not equal to 24 million US. But what we then did was we sold half of that asset to a third party for, I think, 15 million, got that cash, right? Pay down the money that we borrowed, and then, redeploy some of that capital. So I'm saying that the path to pay down those liabilities are just dependent upon when we exit developments that we are in versus when we are reinvesting in new developments. So the SRF is very different from, let's say, a normal manufacturing firm who borrows money for working capital purposes, right? And you're basically using the working capital as an ongoing thing, and you might term it out. You can determine that you want to term it out over 10 years or whatever. That's not how SRF operates. So every bank that funds an SRF development, once the development is being exited, we have to give back the bank their money. So the schedule is many and varied, and One Belmont is the first such one where once we are exiting, we have to pay back the bank's money first. I hope I've answered the question.
Understood. Mr. Chair, in relation to the Lake Spend property, when will this facility be completed, and how soon will you be able to achieve a return on this property?
Great question. We had the groundbreaking ceremony in December 2025. The contractor is on the ground now. If you drive past, work is on the way, and we are on schedule to begin handing over the lots to the purchasers next year summer. So summer of 2027, we will be handing over lots to the purchasers. In terms of the return on investment, that's something that I will speak to. I'll have the investment manager speak to the return on that investment.
All right, so good question, right? What I would say is that the value of Lake Spend relative to, I guess, comparable developments in the market is night and day. So in terms of when, David gave you the when, but I'm answering the part about, I guess, the what. Yeah.
I didn't quite get that, but somewhere I'm lost there.
Okay, so let me not, I think obviously the return on any real estate investment really and truly speaks about the exit, yeah? So the idea is that the return or the dividends and so on come when we exit. And in the case of Lake Spend, given that we are bringing to market 34 service lots, that return will come when we have completed 34 or however many sales agreements, and the purchasers have paid SYGNUS Real Estate Finance for those lots. So in terms of the return on investment, I hope that gives you better clarity that the lots obviously will be sold when that cash comes in. Of course, that is how SRF will get its return. Now, from a practical standpoint, clearly we can't complete that process until we have finished the construction on site. We have obtained the splinter titles. Obviously, you have to get a certain stage of construction before they will issue and split the titles. And then when we're able to hand over, we get practical completion, and we're handing over to the purchasers' attorneys the split title, and we get the final payments. That's how it is that we'll be able to bring in that money and close out or exit. And then, of course, the investment manager will be able to report on what sort of return on investment that project would have generated. So I hope that gives you a bit more clarity.
Understood, Mr. Chair. Last question. What are the occupancy level at 1 Belmont?
So the occupancy level, great question. When Jason outlined the status, so the building has 5 floors. As we speak, there are 2 floors currently occupied physically, and the further 2 floors are currently under build out for the tenant who's going to be moving in a few months' time. The final floor is one that we are finalizing the arrangements for the build out, so that gives it the color. 5 floors, 4 tenants, and the point is, as Jason was explaining before, the fact that you may drive past and see a floor that appears to be empty doesn't mean that the floor is not leased, because there is a considerable process that takes place after a lease is signed for the commercial building. We deliver a cold shell. So the prospective tenant has to go out, find an interior designer, do a design, bring in a contractor, and do furniture, and that can take a considerable amount of time.
Thank you very much, Mr. Chair.
You're welcome. Yes, I think we have one more question here.
Morning. Yeah, in regards to Lake Spend, you guys are going to sell it, as in we will no longer have any interest in it, just for clarification. Once the lots are sold, would we have any interest in it?
Thank you for the question. Can you state your name? Are you a shareholder or media? Shareholder. Your name? Horace Freeman. Thank you. So your question is our intentions with the lots once they have been constructed, and either the intention is for the 55 acres essentially is subdivided, and of the 55 acres, about 46 acres of it is what comprises the 34 lots that have been sold. There's a portion of it that will be the common area. Of course, all of the owners, as you would find in a strata or a subdivision of the nature, would belong to, or each of the 34 lot owners would then own a portion of the common area. SRF will be exiting 100%. So in terms of the owners association, etc., they would be the ones who would have the controlling interest in the remainder of the real estate there. But once we develop it, we will be doing a clean exit, unless, of course, the investment manager decides to keep a few lots back for us to invest as a separate project. That's always the option that the investment manager holds. But the idea is, as of this moment, we are going to market with the lots for sale as we outlined earlier.
We have some questions online, so we'll take those questions now, Ms. Moderator.
Sure, thank you.
This question is from David Rose. Is the partial monetization of 1 Belmont going to be similar to Spanish Penwood? Also, could an explanation be given for what economic interest does SRF retain in that property?
All right, I'll have the investment manager speak to it.
Thanks for that question, David. So the first part, if the structure will be the same as Spanish Penwood, we haven't finalized it as yet, but similar, quite similar. And the second point as to whether or not SRF will maintain a position, yes, as to what the percentage is, it depends, right? There's demand and supply. And at the moment, based on the number of interests that we have from our initial market read, substantial demand, but SRF obviously wants to maintain a portion of this because of the prospective future value that we think can be derived on it, both in terms of the price appreciation over time, because these are all leases and the price of lease is going up every year, right? The price of lease not coming down. And the price of lease is also in US dollars or indexed to the US. And therefore, because there's income coming from that asset and SRF wants to right size its income statement with more income generating assets, and that's the reason why we want to maintain a stake. Obviously, if somebody comes and offers us an incredible value for the piece that we want to hold, we'll take it, right? So there's no guarantee. But what we are saying, our intention is to hold a decent piece and dispose of the rest, because we want to also generate income from the part of Bellarmine that we hold, as well as get the capital appreciation that will occur, that we sure is going to happen based on the tenants that are in the building and the structure of the very long-term lease contracts.
This question is also from David Rose. He's asking, what's the status on the recovery of some REINs like Ocean's Edge and Surreal at Sugar Mill?
All right, thanks for those. So Surreal, that development was completed and those units are being sold, actively being sold. We have sold quite a number of them. I think we even have offers that are under contract currently, like 2 or 3 or 4. So we're still working through that process to sell the units, and obviously as the cash come in, that's how we're exiting, right? And the other one, which is Ocean's Edge, we were working through a process, but we have finalized on a structure that will basically allow us to resolve whatever the issues were. In other words, that will allow us to get back our capital, our large portion of our capital, based on the underlying collateral that we have. So we expect that solution should be effected probably closer towards the 4th quarter of 2026, meaning the start of it. So once we have more information, and that will obviously make this update in our MD&A or the audited financials, as the case may be, as we go through time. But that's the update at the moment.
Final question from David Rose is, has SRF identified the next 2 major development assets for the 3rd investment life cycle, or is that contingent on what happens in the 2nd life cycle?
So, as Jason alluded to in his presentation, we are constantly on the lookout for investment opportunities in the space, both locally and, as he indicated, in the wider Caribbean. We have a significant pipeline of opportunities that we are currently scrutinizing and analyzing. Clearly, there's a process that we go through internally before any of them can be, I guess, mandated. We have, as Burris indicated, we have a very strict governance process, a very strict risk management process, and the next big projects are probably likely in our current pipeline, but we have a real estate investment advisory committee that has to give us advice and scrutiny on it. We have an investment and risk management committee, again, that we have to present it to. So there's quite a few steps that we necessarily go through before we get the green light to obviously, come to you as the company owners and as investors to say that this is the next big project. So rest assured, we have a very healthy pipeline. Rest assured, we are doing continuous scrutiny and getting opportunities literally on a weekly basis. And I'm rest assured the next big opportunities after Lakes Pen and Miami Bay are being inspected, analyzed, site visits and so on, and at the appropriate time, with the appropriate internal governance green light, we will make you aware of what the next opportunity is going to look like. Can we get a microphone here, please? Microphone? Is it? Oh.
Yes, I was looking at this Montrose Road.
Page, what page, please?
Just Montrose Road. Your Charlemagne Holdings Limited. Page 22. Charlemagne Holdings.
Sorry, what page?
22.
22.
Yeah, which is Charlemagne Holdings, Montrose Road, which is residential.
Correct, yes.
Are you allowed to say what the exact location is of Montrose Road? I know it's not Vale Royal. I know it's not.
No,
Vale
it's
Royal
not. No.
sure.
So it's number 16.
Number 16, and
number,
that's
16. Number 16.
Okay, 16. Okay,
yes.
Because it ends at Seymour Avenue, Montrose.
Correct. Yes.
Right.
It's on Montrose Road proper.
Right.
Number 16.
So it's about midway between Vale Royal and Seymour, about there, right?
More midway between Upper Montrose
right.
and Seymour.
Okay. I got you. All right, I just wondering where it was.
Sure. Number 16.
Location. All right.
It's currently an empty lot.
Yeah.
There's no building on it. It's an empty lot at the moment.
An empty lot, right?
Sure.
All right. And it's going to be an apartment building, I assume, because it's residential.
Sorry?
It's going to be developed, not by you, but I mean, the infrastructure is going to be for an apartment building.
No, we're not doing apartment buildings there. That area is, as
residential.
You know, that's part of the Golden Triangle.
Right.
We will be respecting the Golden Triangle strictures. So
yeah.
what plans we have for that will come to you at the appropriate time to make you aware of what we will be doing there. But it's not going to be apartments, and what we will be doing at 16 Montrose will be respecting the particular neighborhood, and of course in compliance with what the regulators and of course the title allows us to do there.
Right, because a residence, Golden Triangle residential.
It is a residential area.
So it has to be an upscale house or something.
Correct.
To go
Yes.
Up there. Okay.
Any more questions online?
No, we have no more questions online. So I think we'll actually close the Q&A section at this time, unless, we'll close the Q&A section. So we'll hand back to the chair.
Chairman. Right.
Sir.
Chairman.
Thanks again, Director Cummings, and thank you, shareholders, for your questions. It's important for you to get appropriate responses to your questions, and I'm very happy for your participation in this manner. Thank you. So we've basically come to the end of the meeting, from a formal perspective, and at this point we have, just a couple of closing remarks. So I'm going to ask Mr. Dwayne Price to join us here at the podium firstly, just to give a vote of thanks, and then I'll come back and offer a few comments to close the meeting. Thank you.
Afternoon, everyone. Do you hear me? Great. Chairman, shareholders, directors, members of the media, ladies and gentlemen, good afternoon. As we bring today's annual general meeting to a close, on behalf of SYGNUS Real Estate Finance, we would like to express our sincere gratitude to everyone who contributed to making this event both productive and successful. Firstly, we want to thank our shareholders, partners, and stakeholders for your continued support. Your belief in our vision helps us to drive our progress. We are truly grateful for the trust you have placed in us. We also thank you for approving the resolutions passed today, the 4 resolutions. Secondly, thanks to everyone who joined this morning, whether in person or online. We truly appreciate you taking the time to be here. We'd also like to thank our partners in the real estate and construction sector, both professionals and contractors. Your teamwork and support help us to turn our ideas into reality, and we truly appreciate your efforts. We want to give a special thank you to our board of directors, led by Mr. Horace Mesado, for their guidance and leadership. Thanks also to our president and CEO, Beresford Gray, for steering the group forward. To our Real Estate Investment and Advisory Committee, our consultants, our real estate team, and all members of staff, we truly appreciate your contributions. Your dedication and expertise are reflected in today's results. Events like this require careful planning, so we extend thanks to our legal and compliance team, our marketing team, as well as the production and technical partners who helped to deliver today's meeting. This includes Phase 3 for live streaming, Affinity for the online platform, Reasons and Seasons for the decor, Simply Dandy for the artwork and production, Jose Walton for the media footage, Garrick Communications for media support, and LH Multimedia for the photography. We also thank the management and staff of the AC Marriott Hotel, our auditors KPMG, and our service providers for their support. Finally, we'd like to thank all attendees for your participation, questions, and feedback. We wish you a productive rest of the day and look forward to seeing you again next year. Thank you.
Thank you, Mr. Price. This concludes the formal business of the meeting for today. On behalf of the board and management, Mr. Price just said it, but I want to thank you again for your attendance, your engagement, and your participation in today's meeting and your continued support. We appreciate your commitment to SRF and look forward to another year of growth and success together. As always, we encourage shareholders who have not yet provided their email addresses to update their records with the JCSD or registrar and to ensure that we can communicate with you seamlessly. Additionally, we remind all shareholders that you have the option to receive your dividends directly in your bank account instead of via check. So we would encourage you that you complete the JCSD mandate form, which is available on the JSC website. I personally just want to say it's a pleasure to see familiar faces once again. Thank you for turning out. Thank you for participating in the meeting, asking your questions. I know you guys participate in the quarterly discussions online, and we appreciate the interest there. SYGNUS is certainly, as you can see, on a path to significant profitability, and the company continues to grow. And so we want you to be a part of that process. Ask your questions, make suggestions. We appreciate the intimation towards a certain location that may become a viable investment potential in the future. So, make your suggestions, and we'd certainly take those under advisement. Of course, we're not going to yield to the direction of the wind blowing, because the winds change directions fairly, quickly. But we want to invest in channels that will generate long-term results that are sustainable and that can truly benefit our shareholders. And so that's the kind of focus that the board and management takes in terms of selecting projects for investment. There are quite a few projects under consideration, and I know, in terms of returning dividends, we have been a little slow, but one of the things that we seek to do as a team is to ensure that we build up the capacity of the entity so that when we pay dividends, we can sustain that and sustain the level of dividends that we pay over time. And so we ask for your patience there. There have been several indications as to the thoughts of the company, and so we look forward to those materializing. Thanks very much for attending today's meeting. I certainly look forward to seeing the familiar faces next year. Bring your friends with you. Bring those persons who are invested. And remember, the share price, as far as I understand it, is about $10 now. The book value is indicating about $26. That's 160% on the share price. Now, I'm not going to tell you that the share price is going to begin to reflect the book value in 6 months or a year. But certainly, I do consider it a very good investment at this point in time, given what I know and from where I sit, okay? And I will tell you once again that I am a shareholder myself. Thank you very much for your participation. Look forward to seeing you soon. Very best wishes to you all.